We got a huge explosion in the stock market to the upside based on employment data. The question is, are we going to have the thrust to continue to move higher? So stay tuned for more. We start right now. Thank you for watching. This is Richard with Wisdom Investor. The market surged higher after the June unemployment data was released. The market overall liked what they saw. The question is it going to be able to continue to thrust higher? So stick with us for the whole video. We've got some good information here to share. We're also going to look at some of our holdings and where we think this market's going to go here in the future. Unemployment is moving down off of the highs of about 15% unemployment down to 11%. Now, there was other reports saying that the number is not quite that reliable. It's actually about 1% more, which put it around 12% or so, but that's still a drop. Now, let's take a look at continuing claims, initial claims of new workers filing for unemployment. You can see here we're still pretty steady. 1.4 million people filed for unemployment. That is really pretty huge if you go back and look at prior to the coronavirus hitting. I mean, this was hardly anything. Last 4 weeks here have been steady. Even though it's getting a slight drop to the downside, it still is a steady increase in initial claims. Now let's take a look at when the unemployment data is actually surveyed. It's actually surveyed in the week at the 12th of the month. Okay, so that puts us back in here. Here's our current data. This is showing the increase in the number of coronavirus cases increasing, but the actual employment data was taken back around June 12th or so. Now, if you look at some of the states where we have the highest increases in claims over the last week, Florida, Arizona, Idaho, South Carolina, Nevada, Texas. So what this is saying, we had the unemployment data come out or being surveyed prior to this large increase. So what we're seeing right now is an increase in the coronavirus cases. The good news is deaths have not increased dramatically at this point. Okay, we're going to take a look at some of our recent holdings here. We did add the QQQ back here 2 or 3 days ago, and we did get a nice pop in the markets here. This is the Nasdaq 100. It's breaking up above the former resistance area, which will now become support. Let's take a look at it on a 5-minute chart. Here's our pop up higher. Once we reached about the 254 level on the QQQ, we started to sell off. I went ahead and took my profits on this around 254. One of the reasons for that, and probably the biggest reason, this is really getting late in this stage of moving higher. This was really an opportunity just to pick up some profits here in the latter stages of this move. Now, we have various patterns starting to form that are showing us that we may be real close to at least a temporary top. We have some cycles coming together over the 4th of July weekend. Has nothing to do with 4th of July, but these cycles may be completing, and therefore we could be ripe for at least some type of a move back down to support areas in the QQQ. If we look at the weekly chart on the QQQ since the lows in the market, it's been in one incredible move higher. It can only move based on past information here, based on some of the past charts. Typically, the move to the high side only goes so far. Once we reach a certain level, profit taking takes place. Of course, you can see prior to the coronavirus, we had to move up and then came down. But if you even go back and look at prior times, once we reach a certain point in the markets here to the upside, we'll at least come back down to support areas. I would expect this to possibly come back down to at least the 235 area. It could even come back down a little bit lower. Now, we do have earnings news coming out here real soon after the 4th of July. The other thing, too, that's going on here in the Nasdaq 100, we're looking at the RSI up here. We have a negative divergence forming. You can see the previous high here, and I talked about this on a previous video. A previous high, we were surging higher on the RSI. Now we're developed newer highs, but we have lower highs in the RSI. That is a negative divergence. Doesn't mean that the market's necessarily going to come down, but it's just a sign that we may be running out of thrust to the upside. Another thing that's concerning here, we're getting ready to go into earnings season. We're at the highs, so when earnings come out, they're going to have to be real good to continue to drive these markets higher. Another stock that we just picked up the other day was a gold stock. We're going to take a look at that. First, let's just look at gold itself. Gold's been surging higher. Now, it is getting to a point here where it is having a hard time developing new highs. It did break up over the 1800 level, but it's not holding it. Doesn't mean it won't in the future, but we are getting some sell-off here today. You can see pretty good volume to the downside. So we were looking at the GDX. We never did buy the GDX. I was looking at it down in here. Probably wish I would have bought it. Instead, we bought the Newmont Mining. We bought Newmont Mining right in here. Had a nice surge up about 3.5%. I moved my stop up to right in this area here, and we had some pretty heavy selling on Wednesday, which hit my stop. We still got a nice 1% gain on this, but I did get stopped out on that. It was a little bit too tight, but I'm of the belief that when we get a nice gain, I want to move those stops up so that I don't have a chance or the possibility of taking a loss. Now, since then, it's moved back higher, so we'll be watching this, see if it can break up higher. We're seeing the gold price drop lower. We're looking at our weekly chart here. So in general, I try to break up my equity positions into about 50% long-term, and then I'll use a small percentage where we'll do the swing trades where we get a breakout. It may go for anywhere from 2 weeks to 7 or 8 weeks. I may be a little bit more aggressive on the swing trades, but for long-term, we're still bullish on this. There's no reason to sell off at this point. Dollar cost averaging is the best thing at this point. If we do get any kind of a drop in the market back down to support areas, that will be a good place to have a lump sum buy. Long term, we're still bullish. So right now, the top 5 stocks, even maybe 6 or 7 top stocks in the Nasdaq 100, also semiconductors, are pushing the market higher. Financials are still showing some weakness, but as long as we've got Microsoft, Apple, those stocks holding strong, the markets are going to be on the upside here. So here's Microsoft here, broke above previous resistance, which will be support, having a good day to the upside. Now Apple is having a little bit harder time breaking over resistance areas. Amazon continues to go to the moon. It's looking pretty good. We are getting a doji candle, kind of indecision. This may be a point where this may want to at least pull back to support area. Google, strong day to the upside here prior to July 4th holiday. And then we have Facebook here having a hard time breaking over resistance areas. We had some bad news on Facebook. It came back and it's having a hard time. Keep in mind, like I said, earnings season's coming out. Are these stocks' earnings going to be good enough to continue to price higher? Right now, these stocks are at elevated levels, and it's going to be very difficult for the markets to drive them higher even if they have good earnings. Let's look at the S&P 500 here. This is a daily chart here. Came down support areas, driving higher into this next resistance area. Got a black candle, started higher, it's coming down. There is some strong resistance on the S&P 500. This is the SPY S&P 500 ETF. SPY is around 313. That put us around the 3100 area on the S&P 500. So there is some heavy resistance right here on the S&P 500. The Dow Jones Industrials ETF, the DIA, is also in that resistance area, having a hard time breaking up and over. So when we come back from the 4th of July, some of the things that are on the table right now, we have some cycles that are coming together here around the 4th of July weekend, July 5th, that may have an impact on the markets. We also have various patterns in the market that are coming to a completion right now. So the market is ripe for some kind of a pullback, but we'll just have to watch and see. We don't know what type of news, get any kind of a good news out there for virus drugs that are coming out. That could pop the market. Any kind of new stimulus news could pop the markets too. So trying to sell the market short right now is probably not the best thing to do. There's a lot of folks who are anticipating the market go lower. The market typically doesn't peak when everybody's planning on the market to come down. Also, the seasonality going into July can be really good for the technology stocks. XLK Financial Sector Index, as one of our viewers pointed out to me, has its best month of the year in July. So those are some of the things we're looking for when we come back from the 4th of July weekend. I hope everyone has a good 4th of July. If you have any questions, leave a comment.